Boy, what a day yesterday. Price action was unbelievable for day traders. So, going into the Fed minutes, and we'll talk about that there was no rate hike yesterday, yet the markets dropped, then they spiked, then they dropped, spiked, and looks like we're dropping to start out today. So, let's talk about what happened yesterday. Fed came out at 2 p.m. They said no rate hike, right? Markets should have been psychologically excited about that and shot up. But I told you, if that doesn't happen, which I'm still a bear, and here's why. So you got half of the Fed speakers saying they want at least two more rate hikes. Now, understand the market bases the Fed funds rate was like 4.25 at the end of the year, insinuating at least three rate cuts. So the market had priced in three rate cuts. You have at least half of the Fed speakers saying they want two more rate hikes, okay? That's the discrepancy between what the market was thinking and what the Fed actually has in mind. Then you had three of those Fed speakers saying they want at least three more raises. You had one saying he wanted a full four more raises or 100 basis points. First off, breaking news, ECB just raised 25 basis points. They took their funds rate up to 4%. So this shit is happening globally. It's just not here in the US. So what does that mean? Why do we see the market drop? Well, liquidity leaves the market. So understand, as these rates go up, right, banks now say we can invest in a 6-month treasury bond. Okay, we could yield 5.65%, or we can be invested in the market right now. Which would we pick? Well, we know the market is a little, could be recession. We're at all-time highs in some stocks. The tech stocks are ripping. Okay, let's put it in some bonds. Okay, so we're pulling liquidity out of the market. As liquidity comes out of the market, you're talking about supply and demand, right? There's less demand. There's more supply. The market goes down. So what we saw yesterday, don't think that's just like a hiccup. Like, okay, well, the market processed that. We're going to shoot straight up. All you do is buy the dips. Now, if you're a buy the dip person and it's been working for you, congratulations. Keep with it until it doesn't work. Me, I actually give the market some thought and I plan ahead and I say this would be proper entry, good exit strategy, et cetera, and I try and execute. What was I carrying over to this morning? I'm in some Google puts. Why? Because I mentioned yesterday I was a Google bear. But going into yesterday, I mentioned two things. I thought we might see 360 on the Qs, which we saw after the Fed's announcement. And I also mentioned you could also try and fade the initial movement. That was the Twitter talk, right? So the initial movement was down. Where did the markets happen right before we closed yesterday? They ripped higher. So even if you were stuck like all those Twitter people who thought they were, I mean, you have anybody from like 16-year-old kids to 21-year-olds to 40-year-olds, fade the initial movement. You know what? They got lucky yesterday. The initial movement was the correct movement. The Fed came out and said they're very hawkish. Rates are going to continue to go up. That's the disconnect in the market. So me, yeah, I'm still a bear. I still think there are some tech companies that got money taken out. All right, let's go into it. European Central Bank just raised interest rates by 25 basis points. Okay, so we know we're not alone. Okay, those of you that are into crypto, be extremely cautious. Two crypto lenders with South Korea ties halted withdrawals. Token prices appeared stagnant. They were Delio and Harku Invest. Underlying relative activity, the sudden surge withdrawals isn't anything to worry about. Well, we've heard that before with Binance. We've heard that before with Crypto.com. We've heard that before with Coinbase. Now, here's why China's a little strong. China keeps cutting their rates. China cuts their lending rates from 2.75 to 2.65, meaning they're injecting stimulus into the economy. I still don't like it. It's still telling me China's struggling. They're probably lying to us. They're probably struggling a little more than they're saying. But all these people that are in our market saying, okay, buy BABA, I mean, they couldn't be more wrong, but they're correct because BABA is going to 90. So I stay away from Chinese stocks. More power to these people that wanted to take the chance with BABA. I know that our markets have been strong, all-time highs. BABA's going to return, right? China coming back into normality. I say bullshit. I say be careful, stay away. So my thought process, heading in today, was just, okay, let's get my thought process. So let's talk about Jay Powell. He spoke at 2:30. What was the market's reaction to Jay Powell? Here are some questions that he was asked, right? Reporter, what do you think about the projected $51 trillion debt by 2030? What? That's like 6 years from now, right? Powell says, that's not our problem. My job is to remain independent, and I know we're on an unsustainable financial path. That's Treasury's responsibility. So he's saying the path we're on is not sustainable. Okay, we've heard that about the planet. You know, if we keep eating away at our planet, it won't be around in 1,000 years for our kids of kids. So again, Powell says we're on an unsustainable path. Powell says if we're talking about rate cuts, we're probably talking about a couple of years, okay? A few is 3 or 4, a couple is 1 or 2, okay? So he's telling you it's going to take a couple of years to get those rate cuts the market's insinuating. Okay, Fed median rate forecast 5.6% to end the year, okay? The market had priced in 4.25. Huge disconnect, 1.35%. That's why the market should struggle. I went into these Google puts yesterday. Let's talk about my trades yesterday. Affirm was down big again. Yes, I keep playing the same options. Why? Because I'm familiar with them. I also got into some net puts, NET puts. I was in some Google puts, and I was in my Qs. My Q that I got in, right? And I think they went as low as what, like 60 or 70 cents. I sold at $234 a contract. They went up over $330 a contract yesterday after that Fed announcement. So again, I did pretty good. Alphabet, I'm still there. I re-entered the Alphabet trade. Let me see if there's anything else. Those are the Qs, the Googles. That was my video. Yeah. All right. So talking about the Qs yesterday, my prediction, the Qs were sitting at 365. I thought we were going to touch 360. We did touch 360 and like some change, but I would have been happy. And today I'll give you my exit strategy. I'll be happy to get out at 361. So let's go. Let's bring up Discord real quick. How do I present this? Here we go. And then I'm going to bring up some charts and we're going to look at some charts together. I'm going to show you exactly what I'm looking for. Okay. So I brought up Discord. Why? Because first I want to look at the SPY levels. Mention these dark pool levels every morning. So understand, let me just see where we're sitting right now. SPY is sitting at 435.50. Okay, so what do we do? 435.50. Make sure you guys are looking at this with me. You are, thank goodness. So I look in between. I go, okay, we're in the middle of our dark pool level. So we're at 437.58. So if the market does decide to get bought up this morning, I expect it to reject 437.58. What else do I expect? I expect it to touch 434. Why? Here's a dark pool level, 434.67, 431.76, a smaller dark pool level. I'm going to just remember the number 434, okay? And I'm going to tell you for the Qs, the magical number is 361, okay? SPY 434, Qs 361. I'm going to show you why when I bring up the charts, why I'm looking for the market to touch those levels. So what does that mean? It means whatever's happening in the market in the morning, I don't care. I know what my exit strategy is when the Qs hit 361 flat. My exit strategy is when I see the SPY hit 343 flat. 434 flat. I'm going to take profit. So again, I'm looking at the dark pool levels. I could do the same for the Qs. Here we go. Okay. And if I was to look at the Qs right now, I'm looking at each of the dark pool levels. I'm seeing that they're off by 3.7 points. So we're talking about a 1 full percent move. So again, if the Qs get beat up and they're down 1%, is it possible they can get down 2%? Yes, because that would be the next dark pool level down. So again, I'm not necessarily going to sell right away. If I see whatever is down 1%, let's say the market, the SPY, the Qs, whatever, I know the worst case scenario today, I can envision a 2% drop. And then I'm looking at most bullish and bearish flows exiting yesterday. Understand we had that quick pop yesterday before close. So what does everybody do? Man, they've been buying the dip, buying the dip, buying the dip. I'm definitely looking for Tesla to give back. I'm looking for Disney to give back a little. And I'm looking for the Russell to give back a little. Starbucks, I'd stay away from. Alibaba, I'd stay away from unless you're building up longer term positions. Because as China talks about a reopening, and that's what they're doing, and that's why Starbucks is doing well from 97 back up near 100. Now, here we go. If we look at the 0 days till expiration options, I love this feature as well, the GEX-Z, because it tells me that the magnet that should draw the Qs down is around 360. I see it should have a little support at 362. But if that gets broken, I'm looking for a 360 number. Again, I'm just looking for the largest open interest for the magnet to draw it down. I could do the same for the SPY, which is I'm going to see 434 right here, right? So we're at 437. Okay, we're already closed right at this level yesterday. Makes sense. It's being drawn up, but would probably reject 438. Don't have to worry about that. And then I'm looking at the largest level. Now, again, if some of these levels change and they start opening up the 430s, then I'm going to think if 430s go out to here or 431 goes out to here, then I'm going to think there's potential to draw down even further. But right now I'm saying we're already past this level. We're in a little no man's land. Should see a little support right here. But if not, we're going to touch the 434 base. So that's how I use Discord. Now, when I bring that up and I want to look at the charts, let's do that together as well. Remove, stop sharing. There we go. I'm getting a little smarter. Share screen. And there are a couple different charts I want to pull up. Boom, boom. Let's add it to the stream. Okay, good. You guys can see this with me. So let's get over to that. And again, I'm using TradingView. It doesn't need to be a paid service. You can do this for free. But what I'm noticing is, it was much better lesson when the SPY was sitting at 435.50 pre-market over here, because I was insinuating that if we lost this point of control right here and we fall under the 435 level, that the next level down where we saw support would be right around the 434 level, right here. And again, we went slightly under, but you can see the candlestick patterns again right here. So again, I'm looking for 434 to be touched today. I know that's nothing like to wow about because we're sitting at 435. But when I determined this, we were a full 1 point higher on the SPY. With that said, I've got a couple other things open. Google, I was hoping to see Google a little lower, but let's go back to the Google again. 1 minute chart. Get rid of this. 1 minute chart. If we don't find support here, we were wavering for a number of minutes then, and we're sitting right here in no man's land, it tells me that I think we're probably going to drop down to the 126 and 122 64 level right around here. My exit, I was going to make it 122.16. So hopefully we touch that today. Again, my Google options expire. I thought they expired this Friday. I went out to next Friday on those. Those are the, let me just give everybody the heads up that want to know. Google 121 puts expiring 6/23, which is a good thing. I did it by accident. I generally choose end of week options, and maybe something kicked me in the head and we're like, dude, you always get yourself in trouble by not giving yourself an extra week. And I'll look at a couple other stocks. So let's just pull up, we'll change it to a 3 minute here. Shopify. Why is Shopify crazy important? Because right now, as you can see, yesterday morning, Shopify sprung up off some good volume. However, Shopify is one of those stocks that if liquidity leaves the markets, I expect Shopify to go down. So the fact that Shopify is finding support right in this range where we bottomed yesterday, again, if it finds support and holds support and the market gets bought up, we go back to 436, then yeah, you can ride Shopify probably higher than this number. It's probably going above 66.50. So if you want to be bullish Shopify, you're probably looking at a 2 point, forward north. However, if Shopify drops, I'm thinking you're going to see even lower than that. I thought you were going to see something like a 60 number on Shopify. So maybe you have to go back to this day right here. Yeah, maybe to a 63, 62.88 number. There's good sell-off right here, maybe 62.43. So again, on Shopify, way down, I'm looking at 62 and change, way higher. If I want to be bullish on it, 66.50. So you have two ideas, and then you follow the market. The market opens, you look at Tesla, you say, okay, well, they're buying Tesla today, they're buying the Qs, they're buying the market, they're buying the dip. Okay, it's okay to get involved with this kind of option. If not, if you're more like me, then I'm expecting things to go down. Now, here's some good planning for everybody. If I believe today is going to be a red day, there's no sound. Maybe for you, Sonny, if there was no sound, somebody would tell me that. If today was, plus no one would be watching. If today were a red day, what I'm expecting, and yesterday I saw this as well, and then things went down lower. So, or maybe that was 2 days ago. Red day, things tend to drop. There tends to be a bit of a rebound around 10:20, 10:15, and then it drops more. So I'll use examples like either Microsoft, Tesla. I'm talking about big tech. If you think big tech is going to drop, don't sell after the first drop. There will be a second drop, and the worst could be somewhere between anywhere from 10:20 to 10:50 to 11:20 a.m. So my Google puts, if I'm looking to unload them today, and again, they don't expire till next Friday, I would be looking to sell those, thinking that Google will probably be the worst around 10:50 or 11:20 a.m. That just, is based on the history and based on me watching that. So let's see what else we got to talk about. See what other stocks I got here for you. If you have any questions, you guys are more than welcome to ask. Here we go. Cloudflare, Net. I'm staying away from that one. I already did that. The Qs. Again, I'm going to be looking where the Qs are at 363 right now. I'm going to be looking for some time during the day for the Qs to be at 361 flat. So that's a whole nother 2 points or 0.68%. So I think the Qs at some point during the day are going to be down 1.5%. So any put positions I'm in, that is when my exit strategy occurs. When I see 361 flat, when I see 361.15, something like that, I'm going to plan ahead and get out. With that said, we're still pre-market. This is your 5-day chart. They've been buying the dip. So I'm not promising we're seeing 361, but that is my trading strategy. I share my trading strategy. I share my trades. I share my exit strategies, my entry strategies, and how I expect to make money. And if that helps you trade, congratulations. Other than that, I'm sharing the data, I'm sharing the charts. And if you need to look at the data and charts, please just join our Discord. There's probably a link below. You can look at all the same material that these big institutions look at. With that said, I'm also watching the SQQQs, probably at 2020, 2023. My exit on those, because I'm in some calls there, would be around $20.50. But again, I'm going to wait. If the Qs are going to go down and touch 361, maybe I get $20.65. Maybe I get $20.68. So any thoughts on Apple puts? I mentioned Apple yesterday. If I was going to, all right, let me just look at these big tech stocks. Okay, so we'll mention Apple and a couple of the players. What I'm doing is I'm looking at the 1 month chart here. So what do you see? I see volume going down, right? Decrease in volume. So would I be in Apple puts? Well, I saw something worse than Apple that I think actually could probably go down, which is Amazon, which has a much greater PE. Why? Because I see outflow on Amazon, even though it has the same chart, it's kind of leveling off. So if I was going to take a negative position, it would be Amazon right now. Well, I'm already in Google. It wouldn't be Meta because I know that Kathy's doing her switch or a rotation from Tesla into Meta, and other people like to follow her. So I assume Meta will have support. Why could it be Apple? Because Apple received not a downgrade, but a revised upgrade where they took the price target down from 220 and made it 190. Well, that's not too far away. So again, if you want to watch Apple, look at the big flow, look at the market net flow for Apple, and you'll see when they start buying the puts or when they start selling the calls, which tells you there could be downward pressure. Other than that, I would be waiting on the sidelines, okay? With that said, everybody have a wonderful day. Good luck in trading, and I'll see everybody tomorrow.